Good afternoon, traders. It's December 20th, 2022. Doing this video in the afternoon. So last night we had crude oil do a flip on the JGBs. And basically what he did is he said that they were going to buy the JGB 10s in unlimited amounts at 50 basis points versus 25 basis points. So obviously that took away from the dollar. The dollar moved down as the yen strengthened. And so we see here yesterday we had a short in on the dollar yen. It did move down to target. So we took some profit on that. But if we go back and we look at the dollar here and bring up the dollar, we also had an entry on dollar to move down and we took that. But that play is still going. So we're looking for dollar to move down. It'll probably be moving lower than this, but we're looking for probably about the 101 area, the 101.4 area that we want dollar to move down to. It's going to be kind of rangy here for the next couple of days. Probably will not get down there until after the first of the year. So we're looking at probably the first week in January. That dollar will get down here. And then I would expect a substantial rally in dollar, probably back up to 104. Maybe 105 is what we'd be looking for. Looking at the U.S. Treasury's 10-year note, we're looking, last night we had a jump because of that. We're looking at this maybe going back up to about 3.7%, going back, possibly going higher, and then moving down. But we do see this eventually starting to roll over, especially we're looking at probably the first of the year. So we got long gold and we're going to stay long gold, probably looking at this area right up in here, close to 4%, maybe not that far, might be pushing a little bit there, but around at least a 3.8 area to 3.9 area. We look in that area for the yield to start to roll over, and then we would take our gold trade off. But we did get long gold yesterday. This is continuing to move up to target, and I expect this to push out and break out and come higher up. So we're looking for higher yields. Now, traditionally, higher yields have meant stock market prices down, okay? And that may still be the case, but things are changing, and in correlating these instruments, it's not always what it appears to be. So you have to be very careful. But looking at gold, it looks like it's ranging to break out one more time to the top side. So we're going to be in it to win it. We're going to stay long gold, looking to see if we can break out. If we break out, we'll continue up to about we're going to take it about the 1800, little maybe 1850 area, and then we'll cut this trade loose. But definitely up here, it's going to hit some resistance. We'll probably get some pullback there. We'll see if we want to take some profits there, which we probably will. And then we'll see if it pulls back. It may pull back all the way back down to here before lifting off. But we're going to take profits there. That area is going to come in right about 1838. Right about that area, 1838. And then the rest, the move up. We'll take that maybe at a later time if it doesn't break through here or right off the gate. Next, we're going to take a look at the ProShares, the VIX short-term futures. This tells us when this moves up that futures are going to move up. And you see we've been in a range here. So this has been ranging. We do expect it to break to the top side, but we have to have a little bit more confirmation before we expect that to happen. So your range is setting right about in here, and you're looking for this to break out of this channel right here. So we've come down, we've hit the bottom here at this place right here. We've hit the bottom, and we're looking for this to move up, break this top. But there's a possibility once it gets up there, it could move back down before it pushes back out. But in any case, we do expect this to eventually make its way out to the top side and swing one more swing up here. So that's kind of our view on that. So futures right now, probably back and forth until we break out of this. And that's really our key when futures are going to be long, or if it breaks down here, futures are going to be short. Okay. So right now we're in that range, and I'll show you how that plays out in the NASDAQ next. Next, this is the NASDAQ. What we're looking for here on this is to see if this level holds right here, okay? So if that holds, we're going to get a bounce, and I think that that bounce would probably take us right up to that area about 11,530. At that point, we could swing back down, and we'd either hold here or we would break and head further down. If we break here, this is going to go much further down. But if we come back and hold, we're going to swing back up to here. Or if we break this area right up in here, you see the support right in here. If we break that, we're going to continue up, although it's going to be a very hard move to the top side. And we're going to continue that rally up. So what are we looking for here? Well, we're long at this point right here on this channel, but our stop is just outside that channel. And we're going to see if between now and tomorrow, we get another move on this chart to the upside. And if we can pull up to that area I mentioned here, which is setting about, it's not quite 11.5, but it's like 11.450. And if we get up to that area right there, we're going to take profits up in that area right there, 11.450. And if that holds, then I expect it to turn around, and we will just go ahead and let it pull back and see what it does when it comes back down here to this channel again. If it breaks the channel, we're going to get short, and we're going to move it on down. So we're going to short this whole swing here to the downside. But if this holds down here, it's going to be an up move. So that's pretty much the way we're playing this right now. We're long it, but only for a short period of time, just for a pullback. We got short. Once it broke this area right here, the support, we shorted it down to here. But we took those profits and we went around and turned it and went long. So that's the way I kind of see the NASDAQ right now. I'm not calling for a bear market rally here. We're just seeing it, how it's playing out level by level. And once it gets to that level, which is about 11.45, we're going to see what it does there. We're definitely going to take profits there from our longs that we're in now. If it decides to roll over tomorrow and break through this channel, we're going to get out of our longs. We'll take a small loss, and we'll go ahead and switch to the downside move. But that's pretty much our outlook on NASDAQ. Next, S&P. So S&P, we're looking to see if this could break out and hold, and we got this wick on it. And then we were looking for this area right in here, the kind of like the wedge zone right in there, to see what would happen if it was breaking this channel. Then we get short. We were long until that. We actually got long down in here quite a while ago. And so once that broke that channel, we pulled all of our long positions off this, and we started to get short. But we got short in small positions. We didn't load up in big positions to the short side. So what we're looking for now, it's come down here and it's hit this 50 fib. I was hoping it would come down and hit the 61 before lifting back up, but 50 will do just fine. So it's a support zone. You see this support over here. So what we would want to see is this push back up, maybe to about 39 and some change. And then I would expect that to roll back over. And so that's pretty much what I'm looking for on the S&P. So we're long this up to about a 39.12, 39 flat area. And then I would look for this to roll back over. We will probably get short this again, probably like we're going to do the NASDAQ, and just watch this probably move further to the downside. Now it could come down here to the 61 and then reverse there and come up like this. We're not going to worry about that right now. We're just going to look at the immediate term moves, and we're going to see if we rally up. If not, if we break this tomorrow, we're going down to the 61, and we'll look to go long there. We'll get stopped out of these positions, and we'll look to go long at the 61 level and have it push back up to that 39 area from there. But again, we're playing this level by level, day by day, and that's pretty much what we're looking for on the S&P. Pound dollars on the chopping block. So the pound dollar, it's come down. It's tested this 200. This is the daily chart. Pushed up from that. we've caught this move from right down in here. We took some profits up in here, and pound dollar pulled back. Now we are back long it again at this level here. But anyway, it came up, pushed up, pulled back, and we're expecting this to push up again. Now, does it push up, roll over, come down, hit this side of the channel, and push up? Remains to be seen. But we're long at this level, at the 200. We're long at that level. Stops just below this low right here. And we're looking to see if this pushes up. We'll take some profits right here. We're going to take profits at about 1, 2, 3, 5 area. So we're going to look to take some profits there. But if it breaks through that and it continues up, I would look for it to move up to this target here. And that target sets at about 1, 2, I'm going to call it 127. And so we'll take that off, that trade off at 127. 1.27, sorry about that. 1.27. And so that's our trade for the pound dollar. Euro dollar obviously correlates with the Dixie because it's the biggest currency in the basket. But what we're looking for, again, we're looking for euro dollar to come up to this level right here. And that's hanging around 1.088. Now, this green line here is the break of the large channel. So this right here, when euro dollar broke, came down, and we figured it would retest it at some point, and that's what it's done. It's retested. We entered this at this point right here, but we have been in and out of this trade, and we're out of it right now, but we just re-entered again yesterday. So we're looking for a long to finish this move up to that level here. It's around the 1.0878, 1.09 area. And that's where we're looking to take this to, and then we'll be out of this. We won't be trading it for a while because we believe, unless it breaks back up into this channel, we believe we're going to come up here and we're going to start to roll over. We're going to start to see strength in the dollar again. But again, we're going to correlate this, trade at level by level, and we're going to see how this plays out on the euro dollar. Looking at the financial sector, so if we do get a pop, I would look for it to pop up to about 34 and a half. So at this point here, if you can see, we have a small head and shoulders forming here. Good chance that this is going to pop. If it does pop, basically what that means is that our S&P and our NASDAQ trade will come into play, and that will work out. But right now, we're still in the process of developing that head and shoulders, and we're going to see if that pans out. If it does, then we look for the pop. Again, up to about 34.5 on the financials. So that's generally what we use this for. And then we could see this once it reached that level near the 200, this roll back over. But we'll see what it does once it gets up to that level. Smart money was selling off on this last move. We see a blue candle on it today, a long candle on it. I'm expecting this to pop up maybe up to about the 75 level, 75.10, somewhere up in there. But if we do get this bounce, I'm looking for this to climb up to that level. Once it reaches there, again, we'll assess the situation, see what's going on. But so far today, it looks like smart money is starting to buy this market versus selling it. And we expect them to buy it up to a certain level and then possibly sell it off from there. But this is our outlook on the high yield corporate bonds, which is what this chart tracks. Emerging markets still in its push up. It's pulling back here. We're looking for this to be a pullback and to move higher. So once this is done pulling back, we're looking for it to move higher here, push up, maybe up to about 41.34. Somewhere in that zone. It's a pretty congested zone there, but looking for that resistant level right there at about 41.14, and for this to move up to that level. And then we'll see what happens at that point. But again, this correlates with a bounce in the market. Next, we have a chart here, and I'm going to explain a little bit about this chart. So we have what's called the TLT and the triple Q. Now the TLT is the iShares, it's the 20+ year treasury bonds, and the triple Q represents the NASDAQ. And usually you're going to, if you're trading options, you're going to trade the triple Q. When you're trading something like the NASDAQ, the options will be the triple Q. So let me explain a little bit about the TLT. So first of all, the TLT, it's an exchange traded fund, so an ETF. And it's real important to consider this because what happens is if interest rates are going to rise or remain low, this chart is going to help you identify that. And it's going to help you identify what the bond market is thinking. And that's why it's so important, because the bond market, out of all the markets, I believe tells the truth more often than not. And so, for example, using this, the 20-year Treasury bond, if the bond market is predicting that interest rates are going to rise in the future, then they don't want to be in a long-term bond because the price of that bond decreases. But inversely, if they believe that that rates are going to fall, then that bond is going to increase in price and they want to invest at a high rate. So say the 20-year, I don't know what it's setting at right now, but let's just say it's setting at 5%, 4%. Well, they want to buy that if they believe that the future that the bonds are going to go down in yield, interest rates are going to drop. They want to buy that bond so they can have it at a high interest rate, plus the price of that bond increases as it goes down. Now, I'm not going to get too detailed into the yield curve, but if we look at the Treasury yield curve, we can see what the bond market believes is going to happen. They believe that the interest rate on this bond is going to go down. And we can see that because we have a negative yield curve on the far end of the curve. Okay, so whereas, on the short end of the curve, it's going up still, but the long end of the curve, it's heading down. So we pretty much know what the bond market is trying to tell us. It's never 100% guaranteed. But if that is the case, then what we'd be looking here is this channel line right here. And we see that we kind of have a double top here on it. See a double top right there. But even if it comes up and hits this one more time and it starts to roll over, the triple Q, our futures, are going to start heading up to the long side. So the question is this pullback a pullback to go long? And that's why we look at the TLT, because it tells us if we're hitting a resistant area where this is going to head short, that means this is going to go long because these are inverse of each other. So when this is moving down, this is moving up. When this is moving up, this is moving down. You can see that relationship. So this has been moving down for quite some time. If we pull it back here, we see how long this has been moving down to the downside. And then all of a sudden, we have gone into a range here. So are we going to break the range upside? Are we going to hold this range and break to the downside again? And that's really the question. Now, at some point, I believe that this is going to head up. Does it happen here in the next few weeks? I'm not sure, but possibly next year we could see this really rally in the late part of next year, 2023, maybe even into 2024. But we could definitely see this come down another leg down to here or even further before we get that rally. Because as we see in other indications like PMI, PPI, some other forward-looking inflationary detectors we look at, they are all dropping. ISM, they're all dropping. A lot of them are below 50, which is the fulcrum point to tell us if we're inflation or deflation. And most of those have gone into deflation. CPI hasn't gotten there yet, but CPI is a lagging indicator. So we're not really looking at CPI. We want to see everything before that. Plus our yield curve is inverted. Everything is telling us that the Fed, this last 50 basis point rate hike they just did, we don't quite believe they're going to do another. Now, they look at employment, but CPI, employment, those are all lagging indicators. They are the last to know. And so you look at the manufacturing, because if manufacturing stops, eventually CPI is going to drop. Eventually employment's going to drop, because people aren't ordering as much. Stores aren't ordering as much. So people aren't buying as much. Their inventory is stacking up. If people aren't buying, that means the velocity of money is slowing. If the velocity of money is slowing, that means we don't have inflation. And that means people aren't spending. That means contraction. That means deflation or disinflation is starting to come into the picture. So that's really what we're looking for. So I believe that this is not going to break this channel line, but it may get up there, kiss it, and roll over and start heading down, which means that here in the triple Qs, this is a pullback to go higher, which means the NASDAQ gets a pullback to go higher. But we will see over the coming weeks if that plays out or not. But this pretty much wraps it up. Hope everyone has a Merry Christmas. I'm not sure if I'm going to get out another video before then, unless something incredible happens. But all things as they are now, we expect this pullback to eventually turn into a rally, and that may happen next week. But we will see. Take care. Again, have a Merry Christmas. We'll see you on the other side.